Welcome everybody. This is George Veter, Veter Financial here at Veter Ranch. Wishing you a wonderful Thanksgiving on the 21st of November. Getting ready to roll into that Thanksgiving week. We're just concluding a bronc riding clinic the first day today, which we do these 3 times a year. It's very gratifying. We have 13 students from all over the world. We have so many that came from Brazil, a few guys that came from Quebec, Canada, several that came from the East Coast, lots from Texas, all over to have this experience that we try to give them. We have 2 exceptional instructors, Lefty Holman, Dawson Hay, that are national finals qualifiers this year and for many years, greatest bronc riders there is. And then we have Ming here and Carrie doing the video and the playback so kids can see themselves in slow motion and figure out what they can do better. And then we have 45 head of bucking horses that we supply to help them get better at their craft. And it's been just another great day at this clinic. Now, to give you a quick overview here in the 3rd week of November for how the markets have been behaving. We've had an election and some Fed moves since we've had a video blog. And as you know, we had a bump with the election. We typically always do after there's clarity in the polls, but there was also the market voting their approval or showing their approval for the Trump presidency and his policies with the big move the day after the polls closed. So we had all of the major averages up over 2% in one day, and the Russell 2000, the small cap average, up 5.5% in one day, which was just a phenomenal market experience that helped us out for the year. So I'm grateful for that as well. A couple of things to note. We've had this charge in small caps. Small caps now in the last 6 months have been the leading asset category. Theoretically, the reason why they're doing so well versus their large cap peers is because an administration that is trying to lessen regulatory pressure is seen to be more beneficial to small caps than large caps in helping them to grow their business with less red tape. And also with interest rates declining, we've had 2 Fed moves, a 0.5 point and a 1/4 point move to the downside on interest rate policy for the Fed fund rate. And that's seen as helping smaller companies that need to borrow money to grow and expand more than large cap peers that aren't as dependent on lending. So it's kind of the year of small caps, which we're very excited about. Bonds continue to behave well as interest rates go down, and there's a premium on bonds that were issued at higher rates, which we position that in your portfolio, which in hindsight, we did that in good timing. Now, the things, again, that I look forward to now, we have Thanksgiving next week, and then we have the official start of retail season. We have Black Friday for the retail brick and mortar stores and the biggest sales to kick off the consumer season, and then we have Cyber Monday for the online shopping. Now, I assume that we're going to have a phenomenal Christmas season. Americans traditionally always spend their money for Christmas, but this year we had our biggest travel season ever in the United States during the summer. So with people wanting to spend their money, having had raises at work because of a tight job market, lends itself to a phenomenal Christmas season, which will boost stock prices, especially in the retail sector and those that are directly impacted by holiday season buying. Also, we have the highest consumer confidence number last month in October than we've had in 4 years. So people feel good, and when they feel good, they spend money with confidence. If they feel scared, they tend to pull back on their spending. So that's in our favor. We are just wrapping up corporate earnings season for the 3rd quarter. Another over 80% beat rate, 6 quarters in a row. It's just been phenomenal. NVIDIA was the last big company to report their numbers yesterday after the close, and they beat bottom line, top line in every way, which gives the market confidence that this big wave of artificial intelligence momentum is going to continue, and it's going to be a longer term phenomena, not a short-term phenomena. I think during the post-election surge in the market, we learned that financials are set up to have a phenomenal period of growth during this Trump administration. We had bank stocks, including Goldman Sachs, that were up over 10% in one day. They led the market surge as a sector. And when financials are healthy, the rest of the market tends to be healthy. If financials struggle, it's hard to make real progress in other areas of the economy. So that's another thing that leads me to be more optimistic than I usually am. And then the last thing, we have the Fed moving in our direction. The common consensus of analysts is that the Fed will lower another quarter of a point in December, and then we'll be able to have Fed policy determined by the data that we receive on inflation and employment. So, the last thought I have for you, by the way, congratulations on your portfolio performance this year. We all jumped way ahead if we stayed invested through the year. So congratulations, makes my heart feel good when I get to be a side participant and watching you achieve your goals financially. I want to mention too that in this season of gratitude, take time to be thankful for this incredible system of free markets and capitalism that we are profiting from. Be thankful that you live in America, the greatest country on earth, right? We have the highest GDP and one of the smallest of developing nations population base. There's something special about America, and every American should get up every day and be grateful that he is one, that we won the lottery in that sense by being born here. Be thankful that you have the health to enjoy what you are enjoying. Be thankful for the relationships that you get to strengthen during the holidays, during the get-togethers. Be thankful that we live in this time of technological ability where we can communicate more than we've ever been able to communicate with people that are important to us, right? We can become aware and learn and get information like we've never been able to. And that we're 2 years into a market expansion that will change all of our fortunes, I believe. So, I'm grateful. Hopefully that you're grateful. My thoughts will be with you, my clients, and those people that follow this blog, that will have the best holiday season ever. Finish the year strong in December. That's typically our best market year on average since World War II. So I believe it should be again this year. And I'll look forward to talking to you for the next blog in a month. Thanks.